Hi viewers, welcome to Mantan TV. Today we are with HANMANDLOO sir. Today's topic is recovery via IBC.
IBC.
Sir.
Yes.
Good evening sir.
Good evening.
Sir, what is IBC sir?
Insolvency Bankruptcy Code.
Okay.
This was introduced by this NDA government in 2016.
Okay.
So that to recover the loans given by the banks, financial institutions,
Okay.
cooperative banks. And mainly first now this is covered to company cases, corporate cases.
Okay.
Because major defaulters in 2016, means before 2014 were corporate debtors. So many loans were given, but there was no assets. The funds were siphoned to some other accounts or some other purposes. For this purpose, the government wants to recover the amount. The government wants to recover the loans given by the banks and financial institutions. For this purpose, they have to identify who is the beneficiary of the amount.
Okay.
Means ultimately who is the person received the amount. For all this purpose, recovery through identification and acting tough against the diversion of funds.
Okay.
And protecting the banks and financial institutions, because this is public money. All the loans given were with the help of deposits received from public
Okay.
through all deposits. That has to be protected. Of course, shareholders may be ready to take risk, but the depositors are not ready to take risk. They want their protection, and they want their money back as per schedule, as per repayment schedule, with interest. For this purpose, the government has came out with the new act, Insolvency Bankruptcy Code, which came into effect, and which works through NCLT, National Company Law Tribunal, National Company Law Appellate Tribunal, and the High Court and all these things. What happens is, when a loan is become insolvent for a company, generally the loans will be given on the personal guarantee of the management person.
Yes.
But the loans will be in such a way, the guarantee will be only 10 crores, but the loan will be 500 crores like that.
Okay.
So that will be given on the future projections, based on future projections.
Okay.
Future projections based on that, the company, because the company shareholder cannot take back the money. The company share capital, whatever is with the company is with the company only. And whatever the asset created is also will become the security for the loan given. For this purpose, the companies will give, the banks will give loans to companies more compared to securities, personal securities given by them. Generally, for small loans, banks will give based on securities.
Okay.
For term loans, means to acquire assets, they will give 50, 60, 75% also. For working capital, they expect 50% contribution by my company and 50% by the borrowers. And when it happens to large loans, very big loans, infra projects, power projects, all these projects which need thousands of crores, may not be possible to verify, get the security for these loans.
Okay.
So all these loans, they will be given based on the future projections and actual performance compared to them. But many of the loans became nearly more than 10.5 lakh crores became NPS in 2014 when this government came into power.
Okay.
So this government has thought that it is a priority to recover the amount and to protect the banks and the financial institutions and deposits to be repaid as per schedule, as per the maturity period they has to be given. So this is the priority given by this government. For this purpose, the Insolvency Bankruptcy Code brought into act, and for and all the loans were given by the banks and financial institutions were transferred to stress asset management.
Okay.
So it is not written off.
Okay.
It is not waived. It is written off.
Written off. Okay.
It is transferred from profit and loss account or clean the balance sheet to see that the banks are clean, balance sheets are clean, so that the what we'll call unproductive assets is not there in the balance sheet, and doubtful assets are not in the balance sheet. So for this purpose, the loan, NPA loan, which is outstanding for more than 90 days, interest not paid, installment not paid, that will be transferred to profit and loss account, claimed as a loss, means write off. Year-wise,
Okay.
they will write off from the profit and loss account. It will be transferred to stress asset management account. That branch will take care of the legal action through debt recovery tribunal, NCLT, or courts, or anything, whatever arbitration or anything where it is required, that will take care of. So it is not the waiver. Whatever the amount written off from the profit and loss account is not waiver. It is write off.
Okay.
Means the action will be taken by, instead of the bank, the designated special asset management branch will take care of the legal action. They will not give any further loans.
Okay.
The only purpose is to recover the loans.
Okay.
Whatever the amount to be collected, they have to collect it. Whatever the amount to be paid, the statutory dues or any dues that will be paid, and any asset is there, and property has to be sold, auction has to be kept. All this that will be taken out of the stress
Okay.
asset management branch. So that branch will take care of the recovery of these loans.